Good evening, traders. Zach here with the Trading Network. Hope you guys are doing well. It is Thursday, March 11th, and I've got another daily market profile recap for you for both ES and NQ futures this evening. Before we get started, one thing I wanted to remind you guys of is the $100,000 Earn to Trade Gauntlet Mini giveaway. For those of you guys who have not seen the video, I will link it right here. We are giving away a $100,000 futures trading evaluation. Make sure to check the video above for details and enter that contest before March 15th, and you guys could get a $100,000 futures trading evaluation and have a six-figure funded account in as soon as 3 weeks. So check that out and good luck. So we are going to switch it up a little bit. I'll go over to the profile and we will start off with NQ instead of our usual ES. So first and foremost, key level I was looking at, starting off with NQ, I was looking at 1314, 13,014 to be precise. That was the overnight high from the most recent Globex session. The second level I was looking at was 12,979. 12,979 was the prior range high from the prior March 10th regular trading hour session. And the third level was the March 3rd point of control. You can see I have it marked here at 12,892. I changed my ticks per level setting, as you guys might know. I do it pretty often depending on how wide or how condensed the profile is. So the levels will change just slightly. So you can see that I have marked 892 and the POC after I changed the level was 893. So 892, 893 area is the level that I was interested in as a third key level. So fourth key level was the range high from March 9th. That was the 12,867 level. You can see that right here. And that last level I was looking at was the prior value area high on NQ, which was 12,836, 12,837. You can see I have that marked right here. And again, just slightly off because I changed that TPL setting. So switching over to ES, let's dig into those key levels from this morning as well. First level for ES I was looking at, which was the overnight high right here. You can see how similar these trade plans are very often. I'm using the overnight highs, prior range highs, POCs, anything that's in really the relative area that's going to be an important level or that could be relevant in the coming session. So first level on ES was 39.29 even. That was the overnight high. Second level was 39.24. That was right here, the overnight point of control. Third level was the prior range high at 39.1625. We can see that right here. That was yesterday's range high from the regular trading hour session. Fourth level was 39.07, which was the prior value area high. We can see that just a little bit below that last level right there. Fourth level was the prior point of control, 38.9850. And last but not least, that last level I was looking at on ES was just below that at 38.93, which was the overnight low. So digging into the analysis, pre-market analysis that is from today, we did not have any high impact events today. So let us move into the actual analysis. Overnight inventory was long on both ES and NQ. Here is, let me remove some of these drawings real quick. All right, so here's the overnight inventory. This is the overnight profile. Here's settlement on ES. Switching to NQ. Here's settlement right here. Here's the overnight profile. So on both ES and NQ, the overnight profile was majority, almost entirely above settlement price. That means the overnight inventory is long. Both are looking to open above Wednesday's range and value, which means we were looking to open above yesterday's range and of course the value area as well. So you can see today, this is the initial balance. That's where we opened. We were looking to open above yesterday's range and we did indeed, and we held above. NQ, however, we did open above yesterday's range, but we did not hold above. But for what it's worth, we did open above range and value, which means we, again, are opening above the value area, which is where 70% of the session's price action is taking place. And we are opening above the range here, which is this elongated profile right here. All right, so I'll move back to ES just while I read the rest of this. So when overnight inventory is long, the higher probability play is to see New York fade the overnight price action, which could mean seeing downside pressure, and likely that would be the higher probability case. However, if we open outside of range and value, especially above range and value, that also means that trending price action is the higher probability. So if the overnight inventory, like we saw today, was long, if we were in an uptrend in the overnight, then there is a possibility that we continue the overnight price action off the open. If, when using market profile, you see price continue the overnight trend and pick up where the overnight session left off, in this instance, just like we happened today, where the overnight inventory was long, we were bouncing in the opportunity zone, we were in an uptrend. Yes, we ranged for a little bit of time, but we picked up and continued the trend. You can see that if we do not get quick selling pressure, the probability shifts to the upside for upside continuation. Keep that in mind. So, with that said, you can see here, I say if we open out of range and value, that also means trending PA is more likely. That means I will be looking for 2 likely scenarios to play out if we do indeed open out of range and value, which we did. Scenario 1, price moves and holds above the overnight point of control and the overnight high and continues to move in the direction of the overnight price action upon open, which presents long side opportunity. Scenario 1 played out today. Scenario 2 was price rejects the overnight high and the overnight point of control, and we see downside pressure back into yesterday's profile to correct the long overnight inventory. When the overnight inventory is long, like I said, the higher probability is for the overnight inventory or the inventory in general to be corrected. The market moves especially to correct inventory. Think about that. When the inventory is unbalanced, when there is too much buying pressure or too much selling pressure, the market makers, the people that are making sure that the market is efficient, it is their job to correct that inventory and make sure that the market is in balance. Okay? That is a bit more of an advanced concept that we talk about quite a bit in the private Discord and I discuss in my course. So I won't get too much into that, but I want to plant that seed for sure. So with that said, today I was looking at the prior range high from yesterday on ES at 39.1625 as the line in the sand level. And for NQ, I was looking at the prior range high as well at 12.979. So you can see here on ES, here was the level I was looking at for us to hold above. 39.16, I'll draw a box right around there. So if we could not hold above that level, I was looking for downside pressure back into yesterday's value area, but we didn't even get back into yesterday's range. So scenario 1 played out basically right off the rip, which is super cool to see. Now, if we switch over to NQ, you can see we opened and we actually came back down and really struggled to get picked up for the first hour of the session. After the initial balance completed, we ended up moving above the overnight high and yesterday's high and joining ES in that uptrend, but NQ did indeed struggle a little bit more, which was interesting to see. Those tech stocks have been taking a beating, and if you look at, actually, let's go over and do it real quick right now. If you look at the NQ daily chart, for instance, here's NQ daily. Doesn't look too bad right now, but we came all the way below, about 500 points below, actually, the 89 exponential moving average, okay? That's way below the opportunity zone. Now, if we look over at the ES daily chart, you can see that we didn't even get to the 89 EMA. We came, let's see, opportunity zone, or the 50 EMA was at 3,800-ish, and we came to 3,720. So NQ got significantly more extended. Those tech stocks got sold off way more than the stocks that made up the S&P 500. S&P 500 was quite a bit stronger, which makes sense because tech stocks are more volatile and NQ is significantly more volatile as a whole. So switching back over to the profile here. Again, scenario 1 played out, and just to reread here, if price could move and hold above these levels on open, I was looking to take long opportunity to follow the overnight trend. If we could not do so, I was looking to take price or take trades down back into the value area on both ES and NQ. We did not have that happen, and it was basically all long side opportunity today if you were able to stay conscious and follow the trend. One thing I actually just reminded myself of that I want to show you guys is I posted this in our private Discord. And I posted this in our private Discord when we were in an exceptionally strong trend. And let me just switch my screen over and show you guys real quick. All right, so speaking of following the trend, I posted this in the private Discord while I was streaming just to kind of drive home the idea of allowing the trend to be your friend and not trying to be the hero and catch the top, because that's what most retailers try to do, and that's why they flush their money down the toilet. All right, so here we were in a very strong uptrend, right? You can see we're making higher highs, higher lows, bouncing in the opportunity zone. So what I say here is this is why we do not take bear div in a clear and defined uptrend. It is a trap for retail traders to light their money on fire. It's the truth. I'm sorry to say it, but it is the truth. Instead, let the opportunity zone guide the way. You can see that we are bouncing here in the opportunity zone. This is one of the trending strategies that I teach in the Fundamentals of Futures Trading course. So I just wanted to point that out. If you can be of the right mind, it's very simple to follow the trend and allow the market to continue to pay you. If you cannot shake your bias, if you continue to think, oh, it can't continue to go up, oh man, this was such a strong up move, it's got to reverse here, you're doing yourself a disservice, a significant disservice, and you really need to walk away from the computer and shake that bias as soon as possible and allow yourself to be neutral and interpret the market information properly, which is how you can take a trade here and hold it until R3, or take a trade here, take profit, take another trade here, take profit, take another trade here, take profit, scalp around a trend, things like that. There's a lot of ways to manage it. But if you're not of the proper mind, you're going to be trying to short this. You're going to be trying to play this bear div like most retailers who, you know, watch 2 YouTube videos, figure out what divergence is, and are just enough, or just knowledgeable enough, rather, to be dangerous to themselves. So I just wanted to point that out to you guys as well. So I will get rid of that real quick, and we will get back into the trade plan. So scenarios, just to reiterate. Upon open, I was looking at 39.16 as the line in the sand for ES, and 12.979 for the line in the sand on NQ. So here was the line in the sand on NQ. Boom, right there. And for ES, the line in the sand, we already have that highlighted right there. If we could hold above these levels, I was looking for a move up to profile levels from last week and into new highs, and that is indeed what we got, my friends. The S&P, once again, after a massive down move last week, couple hundred points, we closed at record highs once again. So if we could not hold above that level on open, I was looking for moves back into this area and lower if that could not hold. So let us get into the targets because we have a lot of them. First and foremost, the upside targets I was looking at on ES, 39.2375. 39.2375, again, changed the ticks per level a little bit, but that was the overnight point of control. You can see I've got that marked right there. So that was upside target number 1, hit in the initial balance right on open. Second upside target was the overnight high at 39.29. Third target was 39.34. If I back out a little bit, you can see that 39.34 was indeed an overnight high from the February 24th into February 25th session, the Globex session that is. And last but not least, I was looking at our previous regular trading hours high at 39.52 on the weekly chart. And that high was made in the week of February 15th. That was not our all-time high. That was our regular trading hours all-time high. Our actual all-time high, which was made in the Globex session a while ago in that same week, it was 39.5950, I believe. So we got within 1 point today. You can see today's high, 39.5850. So we did not make new all-time highs, but the S&P did close at new regular trading hours highs. I want to make that distinction. So we indeed did make new highs in the regular trading hour session, and you can see that was my last target, was just to make new highs. I didn't really have anything up there, and that's how you got to treat a blue sky breakout sometimes. So on the downside, we did not get any downside targets hit. We didn't even get back down to our line in the sand, which is pretty incredible considering all of the bearish structure and the selling pressure that we've had over the last couple of weeks. So let's move on into the NQ targets and the NQ profile here. Scrolling down a tad, we can see that the line in the sand once again was 12.979. Have this level marked off. The first upside target that was hit was 12.993. That was indeed hit in the initial balance. That was the overnight high, not the most recent overnight high, but the overnight high from the March 9th into March 10th session. The next upside target was 13.52. 13.52 did not get hit in the initial balance, but it did indeed get hit. That was the range high from our, let's see, what was that? That was the March 3rd session as well. and that was one of our larger sessions from last week, that 383-point session. So the third upside target that was hit was 13,109. 13,109 was the value area low from the March 2nd session. Again, that TPO, or the ticks per level setting, was changed a little bit, so it's off by about a point or so. But this was our final upside target that was hit. We had a very interesting price structure on NQ today compared to ES. ES basically ripped off the gate after a little bit of consolidation and stayed pretty steady in an uptrend until the last maybe hour of the session. However, NQ struggled in the first hour, a little bit after the first hour, and didn't hit as many upside targets as we did on ES. Obviously, NQ was much further off the highs, as we discussed, so it was a bit different expectations in regards to what we were looking for on NQ. But with that said, still a lot of upside opportunity. All right, so downside targets for NQ are going to be short and sweet. We only had one downside target hit. Line in the sand was 12,979. That was that prior range high right there. And the first and only downside target that was hit was the overnight POC right below it at 12,969. We did not get down to 12,892, 893, which was our next lurking level. And we got bought up a single print buying tail, which showed us that there were indeed some interested high time frame, other time frame players in that area, showing that that was a fair value, or maybe even a cheap price for that trade, which will be determined in this overnight session and tomorrow the sessions moving forward, of course. So with that said, that wraps up our trade plans for both ES and NQ. We had all of our upside targets hit on ES. We had no downside targets hit on ES. We had we had 3 of our upside targets hit on NQ, and we had 1 downside target hit on NQ. So it was a very strong upside day on ES, wiping out all our upside targets, making new highs in the S&Ps. NASDAQ struggled a little bit, lagged a little bit behind, but still had some great opportunity. So to wrap up here, I want to thank you guys very much for taking the time to watch these videos. I really appreciate you guys, and thank you very much to those of you guys who are liking, subscribing, and commenting on these videos, letting me know what you think as well. It really does make a difference. For those of you guys who want to learn more about the trading network, please check out the links in the description below, where you can find access to our free Facebook group, first and foremost, where you will get access to our trade plans every day at 9:30 a.m. Eastern for ES and NQ futures. You'll also find the tradingnetwork.io in the link in the description below, which is our website where you can get more information on one-on-one mentorship with me. I offer 4-week programs, 10-week programs, and a few other varying lengths. These programs consist of one-on-one Zoom sessions every trading day, customized trading programs and plans, access to my indicators, access to the Discord, access to my course content, and much more. I focus heavily on trading psychology, as that is one of the things that I'm most passionate about, and that's really the thing that I had to get in line to become a consistently profitable trader. So with that said, if you guys want to learn more about the mentorship, if you want to learn more about the private Discord access where you can watch me trade live every day, Monday through Friday at 9:30 a.m. Eastern, if you want to get access or purchase access to the indicator package, the Trading Network Proprietary Indicator Package consists of 8 custom indicators, including some of the ones you saw today in this video. In addition to that, you can purchase access to the Fundamentals of Futures Trading course and the Fundamentals of Futures Trading course bundles, which include access to the Discord, indicators, and more. Thank you guys again. I appreciate you immensely, and I will see you in the next video.